Okay, thank you, Frederic. Thanks to the Changes group for an amazing event. I'm just the warm-up act for Stefan Karpiszek, who's going to be talking about insurance. And for half an hour now, I'm going to talk about tokens. First, let's understand what a token is. I'm the author of the Token Handbook, which is far too many words that you'll ever want to know about tokens, and I'll try to summarize in the next 30 minutes. So on the blockchain, we have coins. The coin is a general unit of value in a belief system. Here's one right here. This is the Swiss 1,000 franc note. This is the tool you want if you are a money launderer. This is a bearer note. You don't need any KYC for this. This is awesome for money laundering. That's a general purpose unit of value in a system. And a token is a special purpose, a specific purpose like this. This is a digital token, and you have many in your wallet. A digital token is a special purpose unit of value in a system. And in fact, this is a continuum. There's no such thing as a token only doing one thing. Tokens can do quite many things. Tokens can be more general or more specific, and a good example would be a poker chip. How many people heard my talk yesterday morning? A few. Okay, this is a quick repetition. In a poker system, you would take your money and cash it at the cashier, and then you'd get tickets or tokens that you can take around to the various games and then use them as money in that system. You can't use a poker chip in another casino. It's within a given system, and it's only for those games. So you might be able to play 10 games with one poker chip, or a token may be used just for one airline seat on one plane that you may have used as your boarding pass. So there are quite a few uses and kinds of tokens. And in fact, tokens have been around for a long time. Tokens represent value, and they're good for exchange. We've been using tokens for thousands of years, and now most of the tokens in your wallet are these digital kinds of tokens. Could represent your gym membership, even possibly your driver's license would give you access to the driving system in your country. So now we're issuing tokens all over the place. ICOs are issuing their own tokens. Often they are for access to a system, but they can be for other things. Here now we have about $5 billion worth of ICOs last year. This year we're already up to about $4 billion. We're on track this year for about $20+ billion worth of ICO sales this year. And we sell all different kinds of tokens. Some are for access, which would be a utility or a system token. Some represent assets, like diamonds or real estate. Some are for tickets. A ticket would be a constant price, a stable price unit of value, like when you ride a bus or go see a concert. And then equity tokens are for shares, maybe in a company or in a partnership. And then there are many other smaller kinds. These are token circulation models, token flow models. This is not my entire token camp curriculum that you will get if you come to Lithuania, and I will explain that at the end. This is just a brief summary. So in many cases, tokens only go in a circle, then a currency would only go in a circle from one party to the next, to the next, to the next. Otherwise, you have the straight line and back. That's the casino chip, poker chip model, where it goes back around to the exchange. And then it could go from source to sink and then die, like an airline ticket for a seat. After that airplane takes off and lands, that ticket is no good for anything, whether you used it or not. It's over. It doesn't have another life. If you were to build a machine that you can change the knobs on and push the buttons on, and it would spit out your ticket design, as a token designer, I have your token. If it would spit out your token, I have here the parameters of your token machine that you would have to choose to design your token. So you would have to design the supply, whether it's fungible, whether they're all the same or not, whether they can transfer, what function does it have, how divisible is it, and so forth. Then you can also create your policy. That has a lot to do with understanding monetary policy, which I think Satoshi Nakamoto could have done a better job on the money supply and monetary policy of Bitcoin. And now more blockchains are thinking more about monetary policy and governance. And so we're getting more advanced governance policies for tokens. And then there are some aspects of a token that you can't design. You can hope for, but only the market can give you certain aspects of your token. For example, our pillar token is, we hope, going to become a meta token. So you can use it to use other systems that require tokens, but you'll never see those other tokens. And whether that happens or not is up to the market. It's not up to me. So we have a lot of regulatory issues you may have noticed recently. Oh, I have a quick quiz. Oh, yes, I forgot my quiz. So now you've learned a bit about tokens. Is this a token? The key to my hotel room is a token, and an airline ticket. Could this be a token? Who thinks this is a token? Anybody? A few people. Actually, this is a garbage bag. This is just made of plastic, and it costs about 4 cents to buy at the grocery store. It's not a token for anything. Is this a token? You know you're expecting a trick question now. Is this a token? What is this? Can anybody read what it says here? 35 liters. Bern. Canton of Bern, Switzerland. This is sold by the Swiss government. Could this garbage bag be a token? Who thinks this is a token? Yes, this is a token. This has all the aspects of a token. One cool thing about it is no KYC. The radical Swiss government is issuing garbage collection tokens without any KYC or registration at all. It's a bearer instrument. This token bag costs about 1 Swiss franc, $1. So everything above the 4 cents that it costs to produce pays for your disposal of garbage. In fact, it can be traded or given freely without any regulated exchange. That's the most advanced garbage billing system in the world. You prepay for your utility tokens, and then you use them or give them away. They have no further value. There's no market value for them. They're always the same price. There's an infinite number. So that we would call this a ticket. It has a substrate, it has identification, and it can carry a payload. And you can use it to access the system with no identification at all. So you see there are actually many, many tokens in our world already, and we're just bringing some of that knowledge and experience with tokens into the crypto world. Now, governments don't understand this, and so they want us to do KYC when we buy tokens. Banks are afraid of the token crazy people. And we can't have Americans touch our tokens. That would be evil. And then we have equity tokens. Unfortunately, for regulatory reasons, can only be sold to accredited rich people instead of the people who really should be able to buy them. And then we have something called a SAFT. Who's heard of a SAFT? A simple agreement for tokens. Okay, that's a bad thing. That's a red flag. If you see a SAFT, it means that people haven't really thought about the whole situation very much. It's a quick sort of a Band-Aid on the problem that isn't the right tool for the job. And we are working now on better approaches to issue equity tokens I'll talk about in a second. There's also the idea of fiat-based sales. Why should your investors have to transfer or trade into Ether to give you the Ether and receive tokens? And on your side, you've got the Ether, but now you can't get a bank account. You can't cash it out. You can't get pounds or euros. What's up with that? Why do we have to trade twice just to get something funded? So one of the things that we're watching for and we're busy creating, and if you want to help us, I would welcome you to come talk to me afterwards, is fiat-based sales, where they can put in euros or pounds, and then the company receives euros and pounds, so that works for their bankers, and then the buyers would get tokens back. And this is a more rational way to fund projects. Remember that ICOs are for project finance, and equity sales are for companies. So, tokens, unfortunately, are taxed as property. So when who knows this? When you do an ICO and you receive a couple million or 10 million or $100 million or euros for your worth of Ether, that's a taxable event. You will pay tax on that year. Who knew that? About half. Yeah, it's a taxable event. You will pay tax on the money you raise in ICO because it's not money, it's property, and property was exchanged for goods, and that property is every time you move Ether, every time you send Ether to anybody or send a token, it's a taxable event in almost all countries except Belarus, which is where we should all move. There are many tax implications, and if you go to thetokenhandbook.com, my tax chapter will be coming out within a week or so. You'll see the tax chapter. So when you distribute, there are many different aspects of distribution, and these are the main factors you'd look at in issuing your token. I'm not going into all those details, but this is kind of a token map, a token species map of all the different kinds of tokens. You can see, first of all, we have active and passive. So the active tokens can be used to do things, and the passive tokens are used mostly to collect rent or to function more or less as money. For example, if you hold a diamond or gold or real estate, that would be a passive token. But if you have an active utility token or for voting, that would be an active token. Then we have transferable and non-transferable. So some things are non-transferable. Right now, for example, a bus ticket can be transferred, but an airline ticket can't be transferred, right? Maybe we'll get to fix that if we have enough influence on regulators. And airline miles and reward points, again, these cannot be transferred in general. And then we have fixed and unlimited. By that I mean fixed number. So we have this problem where when we have a fixed number of anything, we have scarcity, then we're going to have volatility, right? And if you're issuing a token to, say, ride an Uber or a bus or access your gym, that price should not be twice as much next week as it was today, or twice as much or half as much this week as it was last week. So we're talking more and more about what we call tickets, which have an unlimited number, but a fixed price. And that's a lot more useful. And if you look in your wallet, if you look at the digital tokens in your life, almost all of them are tickets, and they don't have this volatility component. Of course, that makes them much less interesting as a portfolio investment. It also makes them not securities and saleable to the public. So this general framework is something that will help us expand our token universe. And I think, and I'm predicting, that about 10% of tokens, and I'm talking about a year or two from now, will be the silly utility tokens that we're offering now. The utility tokens that we offer now have one fundamental purpose. What's that? To raise money. That is the fundamental purpose of a token. Most tokens after the raise, well, okay, we've got some token holders. I guess we better build it into our system or do something with them. After all, they did buy these things, but we don't think about it too much after we've raised the money. So a small number of projects, and I believe this is great for open source nonprofit projects, and I think the rest of them will be different. So I think we'll have about 30% ticket sales. I think we'll have about 30% equity tokens, which will be fully regulated. This is the regulated area here. I think about half of assets will be regulated and half won't. And then I think the funds will be tokenized eventually, but right now you can't really tokenize a fund interest. If someone tells you he's got a token for a venture fund or a hedge fund, it's illegal right now in almost all countries. So this is where I think we're going. And for that, a lot of people should be thinking about tickets. And I want to highlight a few models for doing this. So in the equity token world, we're going to do an ICO, but that's going to sell 20 or 40% of your stock. Remember, it's stock. And that'll be the first issue, just like when you sell stock to investors. And that'll be locked up for 1 year by law. It's also a good idea. You might even want to lock it up for 2 years. Trading might start after 1 year, at which time you want to do your second round if things are going well. In general, in startup land, in company finance, most companies don't make it the first 2 years. Most companies go away within 12 to 18 months after getting their seed round. So fine, the survivors should get a second round and again, sell 10 to 30%, and this will be dilutive. So this is a dilutive financing round, just like we do with stock today, with paper. And then the third round and so forth, you will sell whatever you need. And this aligns the investor with the buyer, with the seller, with the entrepreneur, because the entrepreneur doesn't want to give away 70 or 80% of his stock initially. The entrepreneur only gives away enough stock to raise enough money to get initial traction and then raise more money at a higher valuation later. This is familiar. This is called early stage finance. And this is more or less the way we're going to do it using tokens. When we sell tickets, we can use the Kickstarter model, which is you sell your first batch of tickets to your exciting new system that you're going to build. And these could be at a premium or a discount for your early adopters who want to buy your new system. And then they will get the benefit of the system by being first in. There might be a market for these things. And then after they spend those tickets, new tickets will be created. And eventually, over time, after a few rounds, you'll have an open system where it's a fixed price, unlimited number of tickets to your system without the volatility and without it being a security. Does this make sense to people that we should start more or less doing in the token world what we see in the real world? I'm not saying we should buck the trend and do everything crypto the way we've been doing it. I think we should do a lot of things crypto in ways that make sense for each project. Here's an idea for industry rails that I'm interested in pursuing if anyone wants to work on it with me. Many ICOs are now issuing a kilowatt token or an artwork token. I know some people working on prescriptions, but it doesn't make sense for competing systems to have competing tokens for a fundamental unit of value in a system. What we want are ubiquitous single source tokens that are very cheap. So we're interested in building an energy ticket. It's a ticket because there's an unlimited number of kilowatts. There's an unlimited number of artworks and prescriptions and airline seats. These would be tickets that you would then put value on top of. So you might buy a ticket for an artwork for 5 cents from the art industry in general, and then attach it to a piece of art, and then make it divisible and so forth. But then the price of those tickets doesn't vary with the price of demand for those basic tickets. It varies with the price of demand for that artwork or that kilowatt second. So putting an artificial cap on ticket sales doesn't make sense. And we want to create a ticket chain that lets people do just that. For most industries that would rather use tickets than a fixed number, and then they'd have volatile price. There's no reason you should pay twice as much to ride a bus or get a prescription next week as you do today for exactly the same thing. So let's start fixing this industry with a lot of these things that I've talked about. This is the kind of the stack for how this will work. And at the bottom level is a fundamental token that can be the rail that other tickets, all these objects, all these units of value ride on top of. So we're looking for new token standards. The ERC20 token standard is the Model T of tokens. In 10 years, there will not be any ERC20 tokens. We want to design better tokens for specific purposes. They may include KYC. They may include regulation. They may include the kind of attributes they need to do their job and not one size fits all. For investors, I recommend that 90 to 95% of these projects will more or less be worthless. If the token is just used for raising money, that's a good sign. I think we should not overpay. I think we should not prepay for world domination. I think that means that anybody raising more than $10 million initially is asking for too much. You can go really far today in technology for $3 million, $2 million, even $1 million. And that's why we want to introduce equity tokens so we can have better distribution of financing for projects rather than winner take all depending on how good your marketing team is. I think that investors should invest in at least 20 tokens per portfolio because every single token, no matter how many people stand on this stage and tell you we got 30 pages of research on all these tokens, they are still lottery tickets. There's tremendous risk in all these projects. There's tremendous risk in tokens in general. Do not be swayed by expert opinion, research, commentary, blogs, or marketing. There's very high risk in these projects. Be smart and invest in a broad portfolio. Don't be overexposed. Risk is not so bad. It's exposure that kills you. Don't be overexposed as an investor. If you've got a lot of Ether and it's gone up a lot, take it down. Distribute your risk. Go diversify that portfolio. We're working on a portfolio for 50 cryptocurrencies in one investment. I'd love to say it's a token, but that's not legal at the moment. But you'll make one investment in 50 cryptocurrencies, and it's flat weighted. It's 1/n, so it's not cap weighted. Don't invest in any index products that are cap weighted. That's silly in our industry. Look at flat weighting, and this is how you should value your portfolio. In other words, if you want to put, say, 20,000 euros into 20 projects, that's 1,000 euros per project. Don't overweight and overcommit to a project just because you like it. At Pillar, we're developing a wallet and an ecosystem for trading these things, for issuing security tokens, equity tokens, tickets, and all these kinds of things. We invite you to participate with us. We're looking for people to help us get all the licenses we need. We're looking for people who want to develop for our platform. And we'll be having a big event in Vilnius, Lithuania, the 15th to 22nd. You'll be learning about tokens at my token camp. That will be exclusively for people who come to Vilnius. It's a free conference. You can learn about it at pillarproject.io. And then in the fall, I'll be starting ICO camp to help people strategize their ICOs and come up with their, spend 4 days with me and my team, and you'll have your ICO playbook ready to go, whether it's a security token, how you have to register it with KYC, tax implications, all the strategy you need, white paper, economics, tokenomics, macroeconomics, monetary policy, all these things you need to do to have a proper ICO in this world. I believe ICOs will change a lot. I hope we are part of that. I hope you're part of that. And I invite you to join us and participate with us in all our events and places like this. Come up and talk to us. Talk to me. Feel free to ask any questions. I might have 5 minutes for questions. This is just kind of a digest version of my token talk, so I'm offering 5 minutes. Anybody has a question about your project or about what I've said. I know it's been a little quick, but I also believe that we are going to tokenize and trade pretty much everything. And so if we're going to tokenize and trade pretty much everything, I think we should get serious about it. So we work with a lot of lawyers. We work with the Crypto Valley Association, with the Chamber of Digital Commerce in Washington, D.C. We work on a lot of lobbying efforts. And in fact, we'll be in Brussels talking with legislators at the EU event in about 3 weeks. And we also ask you to help be part of this, because we have to educate legislators and regulators. You got to remember, regulators are just enforcing the law. If we want change, we have to change the law, not the regulators' minds. So we're really working hard on all these lobbying efforts. Anybody has a quick question? Before we go to the big entertainment, and that's Stefan Karpiszek. Yes.
I have a question about carbon credits. I'm also in Brussels within 3 weeks with the question about validation and individualization of carbon credits. Do you have any experience there?
I have no experience there. My research on carbon markets shows that carbon markets generally benefit the people who create the carbon markets and nobody else. So maybe there will be some carbon credit token that will help change the world, but I don't have any idea if that. And I'm not totally sold on the whole concept, frankly. But it's probably worth trying. Anybody else? If we do that, though, it should be a ticket. It should not be a fixed number. Anybody else? All right, great. Well, thank you very much. Thank everybody for coming. And I now will leave the stage to the amazing Stefan Karpiszek.